In this video, we'll be taking a look at the future analysis to get prepared for the week ahead. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. And if you're interested in learning to trade Forex like a professional, check out our complete Forex trading course on Udemy. I have the link attached in the description below as well. So we'll be taking a look at four different chart setup today, which includes gold, Bitcoin, crude oil, and GBP-USD. Starting with the gold chart on the 1 hour time frame. Remember last week we talked about the possibility that this week, so the week we just concluded now, may be a week of patience because there wasn't a clear setup as to what the markets was going to do, right? So the price action wasn't as clear as it is right now. So following last week's analysis, we talked about the possibility of price being rejected by this trend line over here. Mind you, this is a 1 hour time frame. So this is a trend line cutting across these lows and these lows over here, right? And now we seem to be trailing along this trend line, retesting this trend line multiple times, right? So you know what they say, when a trend line or when a level is tested multiple times, it's bound to be broken, right? So I do think there's a good chance we break out from this consolidation to the upside this this week. But that's not you trade. Don't trade solely based on sentiment and gut feeling. You look at the price action, see what's going on, and then you make decisive information. You make a decisive decision. Excuse me. So my bearish case scenario for gold right now. So I'm going to talk about the bearish case scenario first before we take a look at the bullish case scenario. So bearish case scenario would be gold being rejected by this trend line as it's been multiple times right now. So a rejection, excuse me, let me just zoom this out a little. So a rejection by this trend line, in case you already know what this trend line is, would mean price rejected and come back to the lower bounds of the consolidation. If we do get another small consolidation over here followed by a breakdown, then this would be a confirmation to go short. This is my bearish case scenario for gold, and I know you may not think gold will be bearish this week, but it's very possible and highly likely. So this is how I'm going to take, go bearish on gold if we do get rejected by this trend line and get that pullback to the lower bounds of the consolidation followed by a good breakout. So my entry would be under the breakout. Stop loss is going to be placed above the consolidation list of the breakout, and my take profit target is going to be into this area of value. So the first time we dumped, we didn't quite tag the lower bounds of this range, right? So we got stopped around this price level. So I do think if this happens, we get a bearish breakout, there's a good chance gold comes into this area of value this time, where we then wait for another opportunity for a consolidation, for either a bounce or either a breakout to the downside, right? Which would mean targeting this other area of value. So right now, it's just based off of the setup we can see on the chart right now. Okay, so there's no guarantee this happens, but this is one of the bearish case scenario, one of the bear cases, right, which we look forward to take bearish trade opportunities. Now for the second one, so if we do not immediately get a reversal or a rejection, mind you, just to say something of note, there's a good chance also we come into this trend line, consolidate, and get a small sweep of these lows, right? Then bounce off. Very, very, very likely. So that's the reason why when you get into your entry, when price dumps maybe 200 pips at the case maybe, it is a good practice to always adjust your stop loss to your entry. So if your stop loss is placed around these levels before, then it is a good practice to adjust your stop loss back to your entry. So even if we do get a reversal, you would be safe either way, right? So something to pay attention to. This is something that could totally happen and very likely because gold is still bullish. So there's a good chance we sweep the sellers of the market, then pump go higher. So the second bearish case scenario will be waiting for price to get a quick bump into this trend line, right? Area of resistance, then dump hard. So this will also be another bearish case scenario to pay attention to. So if this happens, then you want to watch out for something like this. So let's see. So this trend line will probably be extended towards this area of value. Then you can watch out for that consolidation we talked about over here for a bearish opportunity. So just in case we don't go down immediately, right, to take out these lower bounds of the consolidation. Even if we do get a pop-up to the upside, you shouldn't be, excited quickly enough to jump to a buy trade opportunity, because this trend line over here seems like a solid area of resistance to me. So there's a good chance we pop off and dump back. So that's why the bearish case scenario is still very much active, right? So now we've covered the basis for our bearish case scenario. Now we're going to talk briefly about our bullish case scenario. Mind you, if you disagree with me on what I just discussed, please leave your thoughts in the comment section down below. And I'll do it to respond, or at least learn from your opinions, right? So for a bullish case scenario, first one, I want to see price pop off into this area of value, then consolidate, even if we take out this trend line, right? So if we don't consolidate before taking out this trend line, we just get a huge consolidation over here, then it's fine, right? And then a good breakout to the upside. This would be my absolute confirmation to go long, like a no-brainer, right? So my entry is going to be above the breakout. So immediately after the breakout, that's where I'm going to place my entry. Stop loss is going to be placed underneath the consolidation, at least the breakout, and take profit target. First one could be as high as this one or these highs, then you trail the rest of the position to go higher. Now, one question: if I'm going to wait for a consolidation like this, why do I go short if price breaks the trend line? Like I said earlier, if we get a pop-up into this area of value, then we come straight down, cutting across the lower bounds of the current consolidation, then you don't go short. You only go short, okay? So you only go short if it goes up, comes into this trend line, and consolidates on top of this trend line for a bit. Then you go short, right? So even when you go short, minimum risk, because there's a good chance this may be turning into a consolidation for a bullish breakout, right? In fact, it is highly recommended not to even go short here, because there's a good chance that short position may be short-lived. So I'm going to show you what I mean. So even if we do get, a pop into this area of value, we get a bump to the downside, something like this, we do get a breakout. So there's a good chance this dump may be short-lived, because gold is still very much bullish and go higher, right? So it is better to expect or to go short if this trend line, right, if this current trend line, so this one, if this one holds, right, so it is better if this one holds without, breaking through, and it dumps back, then give us that breakout. So this will be a much more likely scenario to go short than seeing price pop off into this area of resistance first, then consolidating, which may signal a potential move still to the upside. So something to pay attention to. Be careful. Low risk, even if you're going aggressive, trade low risk, tight stop losses, and see how the markets react to these levels, and then you have your answer, right? That's briefly for gold. Moving on, we'll be talking about Bitcoin. So Bitcoin briefly. Right now, this setup looks really, really nice. Hopefully, it doesn't get us burnt again, because we had good setup also around this area of value. Sorry, around these price levels where we had these consolidations. Turned out to be just part of the consolidation. But right now, it seems to be looking serious, because we had a bullish flag. So this is known as a bullish flag, right? The reason is because this is classified as a flagpole, right? This is classified as a flagpole, and this is the flag itself. So it looks like a flag. And it happened after a bullish run to the upside. So there's a good chance we get another move to the upside. So the thesis for this kind of setup usually, right, I'm not saying it works all the time, is you take a measured movement from the lows to the highs. So there's a flagpole, and you measure it with this current consolidation, which means there's a good chance Bitcoin is going all the way up to between $38,000 to $40,000. A very good chance you see Bitcoin run all the way up to $40,000, but let's say $35,000 to be conservative, right? But now, I think this one looks obvious. The current price level is a good opportunity to buy if you have a good risk management. That will mean entry right now over here. I have no idea when this video is going to get to you, so price may be far along by then, but current price level is a good opportunity to go long, right? Stop loss will place underneath this lows, so the consolidation that led to this move to the upside. First take profit target, you can see I already have my alert over here. These highs will be around these highs. I put another one here just in case I'm not on chart, right? So second take profit target obviously should be around $25,000 or $30,000 if you're willing to hold the trade long enough, right? So this is a no-brainer. You shouldn't be going short on Bitcoin right now because this is a classic, bullish setup, right? A bullish flag, bullish consolidation, consolidated for approximately 3 weeks, right? Consolidated for approximately 3 weeks. Now we have a good breakout signaling a bullish momentum. Meanwhile, if you're following up the crypto market, last week was Ethereum's turn, so Ethereum pumped last week. Now I think capital is rotating back into Bitcoin. That's why we can see the explosive price movement right now, or the anticipated explosive price movement, right? So if you're not in on Bitcoin, good chance to enter will be now. Well, best chance to enter would have been yesterday, but since we didn't make any video yesterday, now it's also a good opportunity to go long. So if you take a measured price movement, this will mean a stop loss of approximately 250 pips and take profit target of approximately 600 pips. So that's still a risk to reward ratio of 1 to 4, right? Or 1 to 3, which seems decent in my opinion as well. So moving on, we'll be talking about crude oil. So crude oil real quick. Last week also, we talked about the possibility of a breakout from this area of value, and we seem to have had that last week. So this is a 2 hours chart on crude oil. This was a no-brainer, right? Because we had a dump into this area of value. We had a pop-up, pop-off, whatever, a short bounce, which also, signifies a consolidation, like I always say. So when you want to trade breakouts, you wait for price to get into your area of value, consolidate on top that level, then give you a good breakout. So your possible entry price level would have been around its lows, with stop loss placed around its highs, and first take profit target around this price levels where I currently have my alerts. So like we've discussed last week, so we've talked about this multiple times, and I've told you I've always expected crude oil to get bearish, even when we saw this mini explosive price movement to the upside. So over here, and over here, I always told you I still expect crude oil to be bearish, but the real trade opportunity will come when we take out this area of value, and it seems we've had that, and I do think there's a good chance we expect price decline all the way to these lows. Now, if you're not currently on crude oil, I can see that there's a good chance we also get a reversal, so for a retest, right? So if we do get a retest into this area of value, then we should watch out for a reversal or a rejection, a good consolidation followed by a follow through. So if this happens, then this could present you with another opportunity to go short if you currently not on this trade. But for me, I really don't want this to happen because I'm already on this trade. So getting a reversal over here would maybe mess up my setup in a little, because quite loaded up on this already, right? I'm an aggressive trader. So for you to go short on crude oil, the best case scenario right now will be waiting for a reversal, so a possible retest into this area of value, followed by a rejection for you to go short. If I were you, if I'm not currently in on this trade, I wouldn't be jumping into a trade right now around the current price level, right? Because if you do that, it means your stop loss most likely should be placed around its highs. And if you take a major price movement, this will give you a decent 400 pips, right? Okay, 350 pips stop loss, which in my opinion isn't the way to go, right? So it's best to wait for those reversals so you get a best trade opportunity for you to take advantage of the price action you can see on the chart. So 350 pip SL, if you jump in now with a potential take profit target of 300 pips, not even 1-to-1. But if you wait for these lows over here, that's if price gets there, then you could be looking at a risk to reward ratio of 1-to-2. But I wouldn't recommend jumping in on a trade over here because the stop loss is just too wide, even if you have a tight risk management, right? So the best course of action, if you're not currently in on crude oil, would be waiting for a reversal into this area of value, followed by a rejection, right? And this will give you the best trade opportunity to jump in on this trade if this happens. But I don't pray it happens, right? Because I just want this thing to dump like a rock falling through, or a knife cutting through butter. So if this happens, then I'm going to be out of this trade. Quick and easy, wait for another opportunity to get in. But because of you guys, if you're not currently in on this trade, there's a good chance we get a reversal into this area of value for a proper retest before we dump. There's a possibility it happens, but it is unlikely going to happen. But this market, anything's possible. But for me, in my opinion, this will be the best course of action to jump into the crude oil trade if you're not currently in on this trade, right? Lastly, we'll be talking about GBP-USD. So GBP-USD, we talked about the possibility of a bounce over here 2 weeks ago. That happened. Now we got a breakout from this trend line, consolidated a bit, and now we can see the pop off into this area of value, so this trend line. And we're also currently trading above this area of support, right? So now, two questions. Are we going to keep running up, or are we going to get a reversal to the downside, right? So bullish case scenario would be waiting for price to consolidate a bit more, so maybe a dump, consolidate a bit more like this, followed by a bullish move to the upside. If this happens, then you want to jump into your buy. When we take out this trend line, we break out from the consolidation, stop loss, will be placed underneath the consolidation that leads to the breakout. First take profit target obviously is going to be around this high, second one around this highs, then you trail your positions as you go higher. This is a classic bullish trade opportunity in my opinion, and this is what you should be watching out for to go long on GBP-USD. Patience is the key, right? So if you're patient enough to wait for a consolidation, then you're going to get the best trade opportunity to jump into this trade for a good risk to reward ratio, right? Mind you, if we do get a pop off, so if we do get something like this, I'm just going to get rid of this. So if we do get something like this, maybe a quick pump into the upside, I wouldn't recommend just jumping in because there's a good chance we dump back, right? Because this will mean entering here, and possibly you want to place your stop loss over here, but I don't think this is a good enough consolidation for you to assume this is safe enough to place a stop loss. So your stop loss ideally would have to be placed under this lows, which in my opinion there's a good chance we still come smash it through. So this would just be too much of a wide stop loss for you to jump into a rush or jump into a trade on GBP-USD if we get a pop off, right? A quick pop off. But for me, the best case scenario to go long would be waiting for more consolidation. Maybe even if we do go up a little, right, wait for that consolidation. So something like this could happen. It may seem like this trend line would be invalidated, so this one, but the moment we get a breakout to the upside, then that will be your confirmation to go long. So you can then enter here. Stop loss will still give you a tight risk to reward ratio, because then you can place a stop loss confidently underneath this area value. Take profit target remains the same, first one, second one, and you trade rest as you go higher, right? This is how I am going to go long on GBP-USD. Now, you may ask for a short trade opportunity. For me, I don't see any reason why you want to go short right now, because if you go to the higher time frame, so let's see. So 2 hours time frame, for example, you can see that this has been stacking up nicely, right? Bullish trade opportunities, bullish trend, higher highs, higher lows. Even this one over here just got into an area value, bounced up, right? So there's a good chance the bullish trend continues, and I don't think the current price level is where you want to consider going short. But if you want to go short, so going back to the 1 hour time frame, there's something to watch out for, right? So to go short, for example, which there's a good possibility it happens, so a short trade opportunity comes through, you want to, just get rid of this, you want to be patient enough to see what happens between these price levels. So like I said, even a good consolidation for a bullish trade opportunity could take out this trend line, giving you an illusion, right? Giving you an illusion of a bearish, continuation of the current move. So I'm going to explain what I mean, right? So if you take this trend line like this, so a break of this trend line could mean or could signal a continuation of this move. So over here, you see dump, reversal, dump, reversal, dump. So you have to be very careful. So even if we do break through this trend line, don't be too quick to go short, because you feel because one happened here, so there's a good chance it declines. This could, so this could you know, go down like this, breaking through the trend line, give you an illusion of a bearish, dump coming up, then just consolidate over here and then break out. So something to pay attention to. If you understand price action, then you know what I'm talking about. That's why I recommend, going through our course. If it's something you're interested in, you want to understand price action, then take that course. So the reason why I think something like this is possible is because I just showed you the overall trend is still active, still bullish, right? So it's also a good chance this turns out to be a consolidation or a bullish continuation. And if you check the DXY, which I don't have time to check on this chart, you would also notice that DXY has been dumping hard recently, and there's a good chance that continues, which may lead GBP-USD, USD to go or climb higher, right? But that's something to pay attention to if you want to go short. So even if you want to go short, right, over here, it has to be extremely low risk. So entering here, stop loss can be placed above these highs, right? Because by the time price gets here, then our bullish case scenario would have been activated. So you want to get off your bearish trade opportunities or bearish trade setups, right? So that's it briefly for this week's analysis. Once again, if you love the content, please like, subscribe, leave your thoughts in the comment section down below. If you're interested in learning to trade Forex like a professional, check out our complete Forex trading course on Udemy. I have the link attached in the description below as well. If you agree with me or you disagree with me with any of the setup I've shared today, please leave your thoughts in the comment section down below and I'm going to review everything. That's it for me, guys. See you next week.